All right. Hello, everyone. Welcome back to the Amit Courageous Show. This is episode 3. We have Aisha today on the show. Really excited to talk to Aisha. She is in financial services. She has been in financial services for the past 17 years, and she is also very bullish on Palantir. So going to be really interesting to get her thoughts and her analysis on the stock. Aisha, can you introduce yourself and introduce what you've been doing in financial services over the past 2 decades?
Sure. So I started my career as a corporate banker. I started off in Standard Chartered Bank. This was back home, and soon afterwards, I moved to Dubai as well as a corporate banker. So I spent about, I think, let's say 10 years there, and then I moved to various other banks, always managing large corporates, government, that kind of companies, but mostly founder-led companies. So from mid to large corporates, right? So I've seen the evolution of how founders have gone from a small outfit, one-man show, all the way to a large conglomerate, right? Then I've seen them from a lending perspective. And thereafter, I moved on to head the treasury department of a local company. It was a family business. They were mainly into real estate and hospitality. Soon after that, I got my CFA. We were managing investments. We were managing assets, looking at listed equities. So whole various spectrum of things. And then after that, I got into corporate finance. I started my own outfit. Um, and that was just right before COVID hit. So,
and when that's like kind of your own business, so like you're like an
that's
entrepreneur
right.
and a corporate person right now.
Yes. So let's say, So let's say it was a consultancy,
Okay.
right? So I was helping clients put together loan packages, debt packages, equity packages, how to restructure their business from a financial perspective. So I'm still doing some of that. And yeah, so once COVID started and, we were all locked up at home, I started investing more and more. I got onto Twitter, I got onto LinkedIn. I started writing. I saw that there was this like whole people were hungry for information. There were a lot of retail investors, and I loved it. I loved the fact that they wanted to get into this space. They wanted to understand finance. For me, when I was young, when I was in my 20s, or not even like before I started working. So I always thought finance was very boring.
Yes,
I thought
I
it
agree.
was, banking and finance was super drab, and I mean, there wasn't much to it, right? So until I started actually getting into that world, when I realized that no, finance is actually one of the most interesting functions there is. So yeah, so I was very pleased, very pleased, and it's very admirable the level of what should I say, effort that people put in to learn about companies. And I thought, I have all this knowledge and I have all this experience. Why not try and help a little bit
Right.
with that? So I try to contribute as best I can. I think you know that I write a weekly newsletter as well, covering a little bit of the markets, some macro, some earnings, so just like a nice, tidy roundup of the week and what's going on and how we're looking at companies. So, for example, last earnings season, what I did is I explored companies from the angle of supply chain and inflation and cost and demand and what's going on in the context of macro. So stuff like that. I'm just basically trying to help as best I can.
It's so interesting when you said when you got into the financial social space, it kind of invigorated you, made you a little bit more excited. I feel the same because when I was in college in finance classes, it was incredibly boring. Like a DCF statement was not interesting then. Now, as I'm evaluating stocks and making investments outside of college, and consuming more financial media, it's like it's a lot more interesting because if you know the terms, if you know what a PE ratio is, you like can understand the media you're consuming a lot better. So like it forces you to want to learn some of that vocabulary, which is really interesting. Topic of the hour: why Palantir? Why is this? Well, first of all, when did you start your position, and what gave you the urge to initiate a position?
Ooh, I started my position in 2020. Yes. Not even in 2019. So I know they listed it in September 2019. But if to be frank with you, I didn't give them a lot of attention when they did come to market, and for the simple reason that they were a complicated company, okay, or at least what I thought was a complicated company at that time, and then there was a lot of controversy surrounding the way they came public. So there were simpler companies to look at. Um, I'm not saying that they were better companies, but just simpler. Okay.
Right.
Um, so I put it aside for a while. And then, there was a lot of noise. I started seeing a lot of tweets, a lot of talk about Palantir, and a lot of controversy, a lot more. So the controversy just kept on increasing
Right.
around the company, and everybody was talking about like them being a black box, things like that. And that is actually what got me interested.
Mm.
So I started thinking, hey, I mean, what's going on? These companies come public. They've opened their books to the public, right?
Right.
So which means they shouldn't have anything to hide, technically. I know that people can still hide things, but technically they shouldn't have anything to hide. So, what's going on? So that's when I started, reading about it. And honestly, I didn't understand a whole lot when I started reading about the company, about what they did. Um, it's not easy to grasp for a layman, I think, right away. I'm not into tech at all.
Mm.
So my definition of tech is basically what I use. So Apple, Google, Microsoft,
Right.
stuff like that, stuff that you can touch and feel and understand and use. Now, the other thing about Palantir is I think the products that they have, they're not, for us to use, right? So
Right.
it's not like something that you can go online and you can just check out the product like this. So
Right.
it's not that easy to grasp readily.
Which makes it harder to
Um,
invest because people can invest in Google because they use Google every day. So it's much more easier for people.
Absolutely. And I mean, that's one of the basic principles of investing, right? Unless you're an
Oh,
institutional investor, for a retail investor, it's always go with what you understand and what you know, right?
right.
It's always easier, it's better, you'll do well. So, yeah, but then uh, I have a stubborn streak in me, which is that if I don't understand something, I do have to understand it. It becomes like a challenge for me. So here were all these people talking about this company, which is so great. And of course, I knew Peter Thiel was behind it, but it's just that it became more and more intriguing to me. The mystery is actually what attracted me to Palantir in the first place. Yeah, so that's how I got started, and I took like a very small position in 2020, and thereafter I've just been building, and it's helpful that the stock price has been low because I can just always add to my position as we go along. Um,
Let's
and
let I was gonna segue real quick from that when you said it's low, and you can finish up what you're saying in kind of this transition. So I'm assuming when you say it's low, you think it's undervalued. So kind of going into what do you think is the value right now? Why do we see such a low value? Why do you think it's undervalued right now? Why isn't it $10 a better value for it right now?
Look, I think there are a number of reasons for it. It goes back to the same thing about understanding the company, okay, and what they do, right? B, it's the controversy. I think inherently people don't like the fact that they've been doing a lot of work for the CIA,
Right.
and for the government, and it doesn't help that. So, for example, Alex Karp, when he comes, a few of his interviews have always been, either you get it or you don't. It's like we are the company, so either you invest in us or you don't. I actually like that attitude about
Me
him. He's
too.
very confident. He's very confident in his company, and it's like he doesn't need to explain himself.
Right.
So I like that, but at the same time, I think where the numbers are concerned, people still have a wait and see approach. um, to me, I think, I'm pretty impressed with their numbers. They have basically delivered on every number that they've said they would deliver. Okay, but people still see this company as a 20-year-old company which is not making any profits.
Right.
Okay, they still see this company, as a, that they're giving out too much in stock comp. So I think if you look at it from a fundamental perspective, and analyst's perspective, there are quite a few things that an analyst may not like,
There's a lot of red
right?
flags.
I wouldn't call them red flags per se, but I would say they are things to be not concerned about, but things to watch.
Do you think an analyst, a traditional Wall Street analyst, would think of them as red flags, or they would also think of them as things to watch?
Some, yes, probably. It depends on who the analyst is and how they're thinking, right?
Right.
So I'm an analyst myself as well. Now, have they stuck to their, trajectory? Yes. Um, are they innovating? Yes. Are they doing the right things? So with companies like this, it's not always about the numbers. And if I look at them from the perspective that, I look at every other company. So if I look at them like I look at Caterpillar or even Apple or even, Google, um, they're not comparable. Okay, because it's still a newer company. Everything that they've been doing prior to coming, to market has been towards developing their offering.
Right.
So they weren't super concerned about bringing this company to market. They were more concerned about getting the solution out there. Okay, so in a respect, that's a good thing. But for bankers, that's not always a good thing, right? So a banker wants to see them doing much more than that. Having said that, I think over the last couple of quarters, what I'm seeing is, even as a banker, we would like them. So the stuff that they're doing, for their balance sheet management, and growth, and they've basically cleaned up their management, their balance sheet, quite well. So I think even from that perspective, from an analyst's perspective, things are changing and we're moving to the right direction.
How do you feel about stock-based compensation and dilution? I mean, what I've heard is that, look, they've been subsidized by the government for the past 17 years. They just really went public. And as a public company, they're trying to attract the best talent because they're working on a product offering, as you said, that is really fundamentally different. It's hard for the public to get it, which means they just need top tier talent and they have to have something to compete with that talent, which is going to end up being stock. But as shareholders, we end up getting diluted. Is that simply not a concern to you because you have a growth trajectory in terms of just like they're going to grow so much it's not going to matter, or does that give you a moment to pause?
So look, what I like about them is transparency. As much as people would like to say that they're a black box and they're mysterious and all of that, they've actually been very transparent about their stock comp and the way they calculate their shares and all of that from day one. Okay, so when they came to when they came to market, sorry, I was looking at the S1, just last night because I read it a long time ago. So I just wanted to have a look at it again. So they were very clear that on a fully diluted basis, you'd have a share count of 2.2 billion.
Yes.
Okay. Now, the thing is, that is still pretty high. It's not a small number of shares, but they're clear about it.
Right.
So sometimes you okay. So putting my banker hat back on, I'd rather have someone who has good intentions and tells me the truth, and a messed up business, versus someone whose business looks beautiful but there's integrity issues there.
Right. Right.
I'll always choose the first one, because a business that might not have all the right qualities can be fixed, but I can't fix a liar.
Right.
I don't know what's coming from them, right? So in this respect, I think I actually like the fact that they're very open about all of it. So,
Right.
and even when so if you I think on the last conference call, somebody, I think a retail investor, asked a question about why Alex Karp was selling so many shares and stuff like that. Now, there's a there's a policy around that you need to sort of, when you exercise the options, and you need to sell the shares because you need to pay
You have to cover
taxes. And
taxes. Yeah.
yes, it's a little bit of there's a complication there. So, but it's not readily understood by retail investors,
Yep.
obviously. So they see it as, oh, the founder is selling shares. Oh, does he not believe in his business? What's
Right.
going on? Because it's become inherently, so you've got five people saying that if the founder is buying shares, that means he believes in his business. If a founder is selling shares, it means he doesn't believe in his business anymore. This is not true.
Right.
People sell shares for a variety of reasons. Um, yes, it's something to note, and it's something to track, and it's something to understand, but it's not readily a red flag, right?
Right.
So I think,
The
let's
transparency to
say,
you kind of matters a lot, right? Because it's like, look, they have Class F
it
shares,
does.
billions of shares, but they have a plan and they're saying, look, I mean, even Karp has said, don't buy the stock if you want it in the short term. It's like that when you're that radically transparent at that point, it's kind of hard to be like they're pulling a fast one under us, or using the shareholders for money at that point.
Absolutely. So I think there's a lot of misconceptions about this company, but I think on the whole, so I think they're changing that. Let me say this though. I think they're changing that. I think their COO has been very vocal and been giving them an image, let's say,
Yeah.
or trying to change their image. They're putting up videos. They're putting up, they're coming more in the news.
Mm-hmm.
They're teaming up with various companies. So they're becoming a mainstream company. Look, I'll tell you one thing. A lot of what a lot of these misconceptions come from the fact that they have always been a hush hush company, right?
Right.
That's been their business, dealing with the CIA, dealing with the American government, the military. You have to be careful about what you say. Okay. So
Right.
there's always, I think they always had this culture of keeping their mouth shut,
Right.
and rightfully so, because of uh, the sensitive information that they've been dealing with. So I think after coming public, the transition to being more vocal, and marketing, and let's say putting yourself out there, cleaning up your image. Um, I think all of this is work in progress for them. Um, it's all about mindset, right? So you for 17, 18 years, you've been thinking one way, and then suddenly you're being asked to think a completely different way.
Being asked to
You're being
advertise for the first time. Right.
Exactly. I mean, and that's probably something that they've never done. So, which is why I think the COO is more in the limelight. I think he's more likable. I think he's got that, happy face,
He gave a TED talk before, you know?
yeah. So, and Alex is more of the, let's get down to business, let's solve the problems, let's do what we're doing.
Right.
I don't think he sort of wants to change as much, and that's his way, which is great. I like him a lot, but that's why trying to bring Sham a lot more to the forefront uh, to help with their image. This is
Right.
my feeling. They're working towards the right direction, you know?
Right. One of the things I liked about the company when I started researching them a lot heavier a couple months ago was all the different product offerings they have. I mean, when I really went through their website, I was just fascinated by they're trying to track crypto. They're trying to help startups. They're trying to do drug discovery. They're trying to do energy storage. Like they're really finding a use case for this software in ways or in industries that traditionally have never used this type of data analytics platforms before. And for me as an investor, when I was seeing them at $22, $23 a share, and then I was just thinking, 2030, 2035, if I don't touch the money I put into them, and they're attacking every industry in the world, and they can grow at a moderate pace and hopefully exceed expectations because that's what exponential growth curves look like. I kind of think this is a no-brainer, and I kind of think of how it's going. Now, for you, coming from a financial perspective, someone who has analyzed companies, analyzed total addressable markets, at the intersection of their product offering and what they're trying to address in terms of the market they're going after, how do you see their data analytics platform actually being able to attack, I think they said $120 billion market? Do you see that as feasible? Do you think that market is growing? Kind of what's your perspective on that?
No, absolutely. Look, I think going back to the topic of product offering, they actually have only two products, which is pretty interesting. Well, three if you count Apollo as well.
Apollo's an
But
interesting product. It's hard to
yeah,
even count it, to be honest, but yes, yeah.
but so from what I understand, it's just two basic products. One is Gotham, one is Foundry, and then if you add in Apollo, right? So, but what's interesting is the iterations of these products. So what they do is it's the same basic product,
Yep.
uh, but they tailor it for various industries and various requirements, let's say. So when I look at, so this is where I liked the company. So when you look at every industry across the spectrum, Palantir can be used everywhere, basically everywhere. I mean, I think more and more. So yesterday I was listening to Professor Damodaran. He had this video and he was talking about data and how we have too much data, right? And we don't know what to do with it. We don't know how to slice and dice it. Sometimes having too much data is a problem. And it's only a problem if you can't process it.
Right.
So this is where I think Palantir adds super value. I mean, we've been collecting data for the last 20 years or so, but we don't know how to use it. We don't know how to readily use it to make our companies better, our lives better. And this is now an offering, a software, a layer, if you'd like, that sort of translates. This is my understanding of the product, that it's sort of, you've got a whole lot of this mess and raw data, and then you've got Palantir like a wall in between that sort of translates and filters and makes it like usable for regular people.
Right.
So you don't have to be a tech guy, or you don't have to be someone who's like, into computers or anything like that. You can just it brings it to you in a usable format.
Right.
And it helps you make decisions faster, smoother, which translates into more money. I mean, who doesn't want more money, right?
Right.
So I think it makes the whole process very efficient, and it will be applied, or it can be applied to every industry out there. I don't see any case where you can't actually use it, because every industry is collecting data, right? It's across the spectrum. So when they talk about their TAM being certain billions and stuff like that, I don't know. I think it could be more than that even.
Yeah. Yeah.
I think they're narrowing their focus because, or let's say they don't want to talk too much about it.
Don't want to be
They don't
overly
want to go.
optimistic. Yeah.
Yeah, so because they don't want to fail people's expectations. And but I think if you look at it 10 years from now, I think they could have potentially have a much, much bigger TAM. And I think the TAM will just grow, you know, as more and more companies transition to computerized systems, to collecting data, to, it's just, it's a growing market. It's never, it's not that their TAM will grow, the entire market will grow. So
Right.
it's a beautiful concept, I think. I think there's a lot to be seen from this company.
I think that's the thesis, right? Because it is compared to Tesla a lot. And I think with the original Tesla bulls, the people that were buying it, we're buying Palantir at 16. They were buying Tesla at, $100 pre-split. Those people believed that the internal combustion engine was gone. It was out. It was going away. There were macro dynamics happening that was going to lead to it leaving. And they were betting on the fact that consumers were going to pick electric cars, not only because of the environment, not only because energy was going to be more efficient, but truly because they wanted vehicles that fitted a certain modern archetype. Not just like that it was Tesla's. Tesla's was amazing as well, but they wanted a different type of product in the market. Just like when the iPhone replaced phones with keyboards, we wanted touchscreens because we realized how much more efficient it was than anything else. I think what you're saying with Palantir is if we all truly do agree that data is the new oil. I know it's a used cliche, but that every single company cannot survive without massive, massive amounts of data. And I think there's this ridiculous stat that we're making the same amount of data per day that we were making from the beginning of the earth until like the year 2000 every single day. Like it's a ridiculous amount of data because we're at a global competitive market with massive amounts of computing power. Then there's going to have to be some technology, whether it's Palantir or something, that's going to be able to understand that data and make sense of that data. And it's like the way I think of it, Spotify should not be a big company because what does Spotify sell? They sell music, right? YouTube sells music, Google sells music, Apple sells, like Spotify singularly focuses on music. It is a highly replaceable business model infrastructure, but people love the core experience of using Spotify for music. It is par none. People love Spotify for music. So theoretically, the way I think of data is like a lot of the big tech companies can manage data, interpret data, analyze data. But there's something keen about Palantir over the past 20 years of how they've understood how to analyze and synthesize data at scale with their technology that seems to make it a little bit more harder to compete with as the market is growing. How do you feel about competitors and sort of big tech trying to take a dig at being able to beat Palantir at their own game when it comes to data analysis?
So I think one thing that Palantir always says is their competition is not other companies, right? Their competition are the companies themselves.
Right.
So what, or their clients rather. So what they mean is being able to explain and actually sell the product to a company means overcoming the hurdle of their internal people actually understanding that they need something from the outside. Does that make sense?
Kind of
So
seeing
what
like a
they're trying,
problem, convincing them there is a problem at the end of the day.
yeah. So for example, their own IT department would want to sort of create their own offering. A company's IT department would want to create their own offering, or maybe their own software or their own code that would sort of synthesize the data, right?
Right.
So that's what they are going up against. And I completely understand what they're saying because many times, especially so somewhat in banking, but when I started my consulting, a lot of the times my problem or the person I had to fight the most was the CFO in the company.
Right.
Okay. I was there to help the CFO, but instead you end up, fighting his resistance, right? Because he has a function. So the IT department or the CFO, whatever you want to say, they have a function within the company. And when a company like Palantir or a consulting company comes from the outside and they come and tell you that, you know what, we can help you do your job better, they feel it like it's a direct attack on them, um, saying that you don't know how to do your job. You need someone from the outside to come and tell you how to do your job or to help you do your job, right?
Right.
So people within companies feel attacked when they see stuff like this. And I think that is what Palantir is describing as their biggest problem. And I completely understand that. Now, when you say other companies as being competitors, there's obviously Snowflake, which is like the primary one. And sure, Google and all these people can just as easily get into it. I mean, Google is one of the largest companies that has the most data in the world, probably of everyone.
Yep.
More, I think, more than Facebook or anybody else. I think Google controls everything.
It
Right?
knows what you search every day. Yeah.
Every day. I mean, so they probably even know what you're thinking. So I understand that it's possible, but at the same time, I think Palantir has been at this much longer than any one of them,
Yeah.
and this is another reason why they're investing in their people so heavily. Okay, and for sure they have a superior product, because if they didn't, I'm pretty sure the U.S. military wouldn't be buying from them. Um, so when you look at the government, so the US military is the largest, the best funded militaries in the world, right? The defense budget is huge. So they have the power to buy whatever they want.
Right.
And with that money, they would always buy the best. So their due diligence is much, much, much more than most other companies, right?
Right.
First of all, because it's the public money, so they have to answer where the money is going. So they can't just buy anyone. And then secondly, they need the best. And that's what they're being given the money for. So they have the means and they have the intention. So if they are buying Palantir, it tells me one thing. It tells me that Palantir is a superior product.
Right.
So otherwise, they wouldn't be getting those contracts.
Right. Pretty
So
simple when you
that's
put it like that.
yeah. No, it is. And in fact, that's one of the reasons also why I invested, because you do what the best does. So for example, if why do we look at analyst ratings from JP Morgan and Goldman Sachs? I mean, the thing is, there are 100 analysts out there. You look at various other ones. Yes, you like them. Yes, you listen to them. But I think when JP Morgan says something, when Jamie Dimon says something, we just we stop and listen, right?
Right.
So it's like that. It's always when the best is the best. So when the government, when the military is buying something, it tells me that this company definitely has something there. And if the CIA is relying on them, what else do we need, right?
Right.
So yeah, it's stuff like this, and there are other companies that might come into play, but I think the way that it would be built would be the other way around, right? So Google is a public company. They've been dealing with the public, and now they want to go into data services. So it's from the other person versus where Palantir comes from is they've been dealing with the government. They've been very secretive. So if they're keeping the government's data secret, you'd probably think that they'd keep your data secret as well,
Right.
right?
Right.
So I think where privacy is concerned, I know people have a lot to say about Palantir's privacy, but I think Palantir would be a more secretive company than Google or anybody else who's actually providing services to the public. So when it comes to those kind of offerings, my guess is people would go with Palantir.
Yeah, I mean, to me, it's not even. I mean, Google, they sell advertising, right? They need the public's data. Like they're an advertising company. They make 95% of the revenue from that little thing that pops up with the ad button after you search something. And Palantir just has a fundamentally different business model than that, and they're honed into that approach. It's the same thing with Spotify for me. Like again, music is easy to copy, but Spotify spent years and years negotiating with the record labels, kind of like Palantir with the government, to build this superior service and user interface and algorithm of recommendations for music to the point where they are the music king, and it's bar none when anyone else would try to compete with them. Okay, we have a couple minutes left. I want to ask you some macro level questions in January 2022. What the hell is going on in the market? Because the growthiest of the growthiest stocks, the stocks that Kathy Wood is telling me are going to be exponential, are getting destroyed, 70-80% down, some of those stocks, Palantir being one of them. And you've got some other stocks, like Ford, going really high over just announcing that they're starting electric cars. So from a financial analyst perspective, someone who's been doing this for a while, can you give us what's happening a little bit? And then also your opinion of where do you think this kind of plays out in 6 months?
Okay. So I think for this, you need to go read my newsletter where I
Okay, and that'll be in the
talk a lot
description, so
about
everyone
macro.
subscribe.
No,
Quick plug.
yeah. So no, this is actually very interesting, and this is why I started writing about macro, because macro is something that even if we understand it and we study it and we know it, things are changing every day. Right now, what's happening is, I'm sure you heard that the FOMC meeting minutes came out. So what happened in the last meeting was they decided to, mm, taper faster, right? So what's happening is they're going to buy, so they're buying bonds, right? So they're going to, so okay, let's put it this way. Bottom line, interest rates are going to go up, okay? And they have to do this to control inflation. Inflation is out of control. Uh, so one of the tools to control inflation is to increase interest rates. Now, from a fundamental perspective, when interest rates go up, so two things happen, right? So your cost of borrowing goes up. So a lot of these companies who don't have profits, their cost of borrowing is going to go up. Or if they have debt, their cost of borrowing is going to go up.
Right.
So, and I think that's one good thing that Palantir did. They settled all their debts, so they don't have any borrowing costs anymore. So now instead of having the bottom line that you would have had, you're going to have even worse bottom line, let's say. And most of these companies are not making profits yet. So if you notice, it's the growth companies that started tanking.
Yep.
And that's because many of these are not profitable yet. So when you have profits far out into the future and you have cash flows coming far out into the future, and you're sort of discounting these back, right? And you're discounting, so the denominator goes up. What happens is each of your cash flows becomes smaller, right? So consequently, the value of your company becomes smaller. So basically what's happening is, with interest rates going up, people are assigning a lower value to growth companies. And therefore, there's just this whole sell-off in the market. Despite I think it's premature. The time is premature, and I think the extent is way more than it should be. But
why do you think the extent is way more than it should be?
I think because we have a lot of so
because if what you're saying is correct, that interest rates do hurt growth companies from a technical perspective, then why isn't the sell-off justified?
No, the sell-off is justified. Okay, I'm not saying that it's not justified. There would be a part of, somewhat justified, let's say. But what I'm saying is, maybe it's coming too soon. It's all happening on news rather than what's actually happening, right?
Right.
So I do understand, and of course, I've always understood that sentiment plays a bigger part than actual actions in the market. But having said that, I think it's happening sooner and faster and to a larger extent than we would have expected. I think it's a knee-jerk reaction. I think we do see a little bit more selling pressure until the price settles. But what's good about that is, hopefully when interest rates actually start to go up, all of this would be priced in, hopefully, because you never know how people still react. I think people are reminded a lot about what happened in 2018, 2019. I think people are not over the fact, so when they raised interest rates drastically, and they had 4 and 5 and 6 and 7 and 8 hikes, and things started to, the curve inverted. So a whole lot of macro things happened, which wasn't really good for the economy, right? So I think people haven't forgotten that. It's very fresh in people's memory. So I think they are trying to protect themselves. And the other thing is, I think over the last 2 years, these stocks have run up so much. People are sitting on huge amounts of profit, right? So they're thinking, let's take our profits while we can
Right.
before things start to, really get bad. So I don't blame them for doing what they're doing. It's understandable. I think the way, the amount that it's run up, so that's why it's coming down faster. And it's always like that. It's like it's a parabolic movement, right? So we'll
Do you
see what
think it is? Do you
happens.
think it is inevitable that interest rates will rise?
Yes.
Okay, so you don't think there's any world in which the Fed kind of debates with themselves and say, we think it's transitory, we're just going to stay out of it. You think it's definitely happening?
Oh no, of course they have to. They have to increase the interest rate. There's no two ways about it. The question is how fast, how soon, how much. Okay, but they have to raise the interest rate. You can't have an interest rate environment like this low. You just cannot. You'll have bubbles everywhere, and you're already looking at stock bubble, and you're looking at housing bubble, and no, you just can't. You have to have a healthy level of interest rates in the economy, and zero is not healthy.
Got it. Makes sense. I think that's a good end to this podcast. I loved it. I loved your perspective from a financial analyst, and I loved your perspective as someone who is heavily invested into Palantir, but also understands a lot of the macroeconomics that are going on right now that are affecting the company. Any plugs, any things you would like to shout out? As she's great on Twitter, so everyone please follow her there. Anything else you would love people to subscribe to?
Thank you. Yeah, no, I'd love for people to subscribe and follow me on Twitter or LinkedIn. My only thing for everybody is read, okay, learn, and take a pause before you make decisions. I think there's a lot of noise on Twitter right now. People are getting hurt and they're lashing out. It's very much understandable. When people are losing money, they tend to become grumpy. So just, take it with breathe. Okay.
Last quick question for you. How do you deal with kind of trolls on Twitter? Do you kind of just like block them out? Because do you get some of those trolls? How do you kind of feel about that?
I tend to ignore them. I don't tend to say anything. So look, I'm naturally a very sarcastic person. But I decided that if I was going to help people, or if I wanted to have this attitude on Twitter where I actually want to reach more people, then sarcasm never helps. Criticism never helps. So I've just refrained from all of that. So even if somebody is poking me or anything of that sort, I just leave it. I don't bother. Sometimes just ignoring people is just the best way. How long are they going to keep shouting?
Got it.
It'll stop eventually.
Makes sense for everyone. Yep. I hope everyone takes some of that advice. Thank you, Aisha, for being on. And yeah, thank everyone for watching. I appreciate it.
Thank you.